Hey, what is up, guys? Few days ago on CNBC financial news channel, Ray Dalio, one of the most respected investors in the world, said that cash is trash. In this video, I will elaborate what does he mean by saying that, and also I will explain why Warren Buffett thinks otherwise. Yeah, cash is trash. Tell us something else we do not know. What I think he meant to say that it's not cash and cash equivalent is trash. I think he meant to say the fiat currency such as US dollar is trash. US dollar is a piece of paper of just claiming checks that used to be backed by real money. Now it's backed by nothing but faith in the US government. I found this interesting chart that summarizes US dollar comparing to other asset classes. It goes back all the way to its 1800s, more than 200 years ago. As we see on this chart, US dollar was backed by gold for more than a century. This is why it was fluctuating in the same manner, as a one-to-one function. Then in 1971, President Nixon temporarily suspended US dollar convertibility into gold.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
I really like that term temporarily. It has been temporarily for more than 50 years. How do you like that? This is why we can see a bigger divergence between gold and US dollar. In addition to that, US dollar did not really lose its purchasing power until that event. Since then, it lost more than 95% of its purchasing power. And as we know that Fed will continue print more and more money and those claiming checks, while US dollar becomes worth less and less. Another interesting thing I would like to point out is that gold was not a good investment for many years, according to this chart. If you would invest $1 200 years ago, now you would have only slightly over $3.20. But on the flip side, if you would invest $1 in stock market 200 years ago, now you would have close to $1 million. How about million X return on your investment? That sounds phenomenal. Well, I would argue that in the near future, we can expect a decent rate of returns on gold as well. And here is why. Since we know that US dollar and gold is like yin and yang at totally opposite sides. When US dollar goes down, gold goes up. And if you look at the rate at how much money US printing currently, it's insane. Since 2008 housing bubble and global financial crisis, they started printing money in very fast rate. Initially it was understandable, because they needed to stimulate another economic cycle. But the interesting thing is they never stopped or even slowed down. They got addicted to those cheap money and continue printing more and more. It's like a depressed person wants to feel better and tries alcohol or even drugs. Depression seems to go away, but he never stopped drinking and taking drugs. And now he's an alcoholic or drug addict. So what happens if he stops taking those substances? He might get even more depressed. The same analogy we can apply to current economic state. What will happen if US defaults on $23 trillion national debt, which we know there is no such money in the world to repay all that debt? Or even worse, what will happen if dollar loses its purchasing power completely? Things might go from 100 to 0 real quick. So yeah, Ray Dalio does not like cash, because there is no limit at how much Fed can print it after all. But unlike Ray Dalio, our homeboy Warren Buffett has a different opinion. He actually thinks that cash is not that bad after all.
We will always operate with lots of cash. And other people might have not sold a few things, but I always want to sleep well, and so I always want to have way more cash than we could possibly need under any circumstances.
Right, to give yourself that cushion.
Yeah, always. If you call me tomorrow with some deal that requires more money than we have available, that would leave me with cash below a comfort level, I've got two choices: to say no to you, or to sell something. And And that may depend on the circumstances and whether I think I can get those sold and all of that. But I am not going to leave Berkshire ever uncomfortable in respect to cash.
He has a large sum of cash in his portfolio. Currently, he holds close to 130 billion of cash, which is approximately 1/4 of Berkshire Hathaway total market capitalization. But if cash is so bad, why is he doing that? Well, here is why, if either Warren Buffett wants to admit it or not. He holds this much cash because he anticipates a market decline. He anticipates one day there will be raining gold outside. And what do we have to do is just to go outside and pick up golden coins.
We do like having a lot of money to be able to operate very fast and very big, and we don't, and maybe we won't. We know we won't get those opportunities frequently. I don't think, certainly, in the next, in the next 20 or 30 years, there'll be 2 or 3 times when it'll be raining gold, and all you have to do is go outside. But we don't know when they will happen, and we have a lot of money to commit.
Of course, this is just an analogy. He will pick up bargain stocks on a few cents on the dollar when there will be a significant market decline. Another thing, cash is very valuable in the market declines because first things first, investors selling assets, and what do you think they get instead of that asset? They get cash in return. In the beginning stages, during the market decline, cash even outperforms gold, since people selling stocks and bonds for cash. Then they want to eventually move into gold. This is why during that transition, cash is even more superior than other asset classes out there. Unlike Warren Buffett, Ray Dalio isn't trying to pick up bargains. He's trying to position his portfolio before market decline by hedging and diversifying his portfolio. Let's take a look what he has to say about the cash is trash and his strategy.
So we had David Tepper had texted into the show on Friday and suggested right now that you have to be in the market full on. And so the question is whether everybody jumps on the train, everybody gets in full on, and then the problem arises that you're talking about.
I think that's most likely.
But then the question is when do you jump off the train?
But also the question is, what do you jump into when you jump off the train? And the issue is you can't jump into cash. Cash is trash, okay? Cash is that they're going to, because they're going to print money. What do? You get out. Okay, so cash is not going to be
So what do you do?
So what you have to do is you have to have a well-diversified portfolio. And first of all, you have to be global, and you have to have balance. And I think, I don't want to grab, the headline's going to be, again, anyway, is I think that you have to have a certain amount of gold in your portfolio, or you have to have something that's hard. There are 3 monetary systems that happen. The first is, in the old days, it had intrinsic value. You'd carry around gold coins. Then we come up with the idea of banks or even central banks. And what they do is they create certificates, we call notes, that are claims on those things. And we print many more certificates than there is money in the bank. And then that's a linked system. And so we did that, and we broke that in 1971. Then you have a fiat monetary system, which means that you can print whatever amount of money you want, and you can put that, and that's what governments do. So we're in that part of the cycle, bigger picture, so that when you think about things, the depreciation of the exchange rate and the printing of money, I think over the next few years is going to be the biggest.
If you want to buy gold, you buy Bitcoin?
No, there are 2 purposes of money: a medium of exchange and a storehold of wealth. And Bitcoin is not effective in either of those cases now.
Store of wealth?
No, because first
potentially.
Of all, it's too volatile. Because of the volatility, you can't go next to it. Someday when it, I would say Libra or something which has more stable value, has got more potential. But also, who's going to do the buying? Central bankers and others. What are they going to hold as reserves? What has been tried and true? Are they going to hold digital Bitcoin? They're going to hold gold. That is a reserve currency, and it's been a reserve currency for 1,000 years. I know this is going to be the headline of gold. I want to emphasize a bit of gold is a diversifier, okay? And that's the advice I can give. I know I'm going to come out of here like Ray Dalio's wild on gold, and that's not exactly.
I'm not saying cash is trash is your headline.
But cash is trash.
But Ray, you would have thought that after all the years of zero interest rates in QE 1, 2, 3, and 4, you could have been making this case that entire time of what you were just making. Maybe there was so much of a lack of demand in the private sector following the financial crisis that it was able to absorb all of that. But coming to us now with that, it almost, at the risk of sounding like the boy who cried wolf too many times, I'm not saying you did, but we all were, the death of the bond vigilante, it's been well documented for the past 10 years. Now you're saying is the time to work.
I think it's totally different. Well, I would say when we are dealing with the negative interest rates,
which we've had for years and years already.
Well, no, we know how long it's been. Okay, and you take each country, and you take where we were in December toward the tightening, then you create an easing. We are now coming to a direction. And so the question for any of us is not whether it's early or not. The question for any of us is when you're holding all of those bonds and you have a negative interest rate or something, and how far more can you push that? What does the next 5 years look like? And the next 5 years is going to be something like that, plus there'll be more deficits. Now, more deficits means sell more bonds. Who are you going to sell the bonds
Why
to?
should I believe we're going to negative interest rates in the United States?
Well, I think that, and I'm not saying now, I'm saying that, okay, if you have a next downturn, okay, what is it's on average 500 basis points of rate cuts. Oh, then you can't do that. You go to QE, right?
Right.
And
we're having trouble
our
normalizing.
Stimulant.
Right.
We don't have much stimulant. We have people at each other's throats over the wealth gap. And so, what will the next downturn be? And also, why would you want to hold those?
So
why do you want to hold those at some point? I don't know. I could be wrong. I've been wrong plenty in my life. So I could be wrong. I'm just trying to describe, tell me why that makes sense.
Also, Ray Dalio does not like Bitcoin because it's not a medium of exchange, nor it's a store of wealth. Well, I would argue that it is actually both of those things. It might not be the best medium of exchange yet, but it's a great store of wealth. He believes that Bitcoin is not a great store of wealth because it's volatile on a day-to-day basis. But if you have a long-term vision that volatility declines from year-to-year basis, Bitcoin is the best performing asset for the past decade. It not only stores wealth, it grows your wealth. Let me know what do you guys think about Ray Dalio saying that cash is trash. Leave your thoughts in the comment section below, hit that like button and subscribe.